Cool. All right. So I got the yearly chart of Bitcoin right here. So far the year's open, traded up higher. This is the all-time index. You just put on the. Let me put on the Coinbase chart. So one of the things that I'm looking for is I'm looking for the separation right between these two candles right here. I'm looking at that as inefficient price delivery. So as the market made all-time highs, it hasn't really spent time discovering if it likes price up here. That's the rationale, the thinking of it. So I honestly don't think that the market's going to open up and go straight up, make all-time highs. Now, I could be wrong. I think the market is setting in a high, and I'm looking for that high to form if I measure this wick out here on the year. I'm looking for that high to form in the lower half. Now, let me put the prices on so we can get actual prices. So the lower half would be under 109,821. The thing is, this is a bullish asset. So if it's going up to we'll look under the hood. We'll look at, like on a weekly chart, we'll look at what 109,821 is. And I don't even think that would be good for a bearish case if the market was going to be bearish or have a bearish move. And I am looking for a bearish move. I'm looking for a swing high to be put in on a really high time frame. So dropping down to a quarterly chart. We'll just go down to the monthly, actually, because there's nothing really important, different. It's this telling you kind of the same story. So I'm watching this price right here. This April. Yeah, baby?
You sneezed on me.
Oh, silly cat sneezing.
And now I'm going to get dry skin.
Oh, no. It's okay. Go get a tissue.
No, it's your foolish. You're just sneezing.
Oh, silly cat. So that price right here, inefficiency in price right here. Basically, the market traded up, blasted off here, and then it has disrespected that on the way down. That's not actually a bullish signal. That's bearish. And you can see the market is currently respecting that area in price. So I'm watching that level right here. If I drop down to now a weekly chart. So what I will anticipate is this. If I'm looking at this range low to this range high, because we can say that this low is a clear swing low, and this high is a clear swing high. Completely objective. So if I'm able to draw a range on that from high to low, where's the 50%? Right there. 100, 350, 835. So is there an PD array or a premium array that overlaps the 50%? Generally, and this is the model that I have, if you're looking at a 50% of the range and there is a fair value gap that overlaps the 50%, the market never needs to reach 50% of that range. It just needs to get into that gap, which is right here, highlighted, and I'll highlight it in blue. Actually, I'm going to highlight it in red because that's where we're going to anticipate the market selling off from. So there's two overlapping areas in price right now to say the market's only going up to sweep liquidity, balance and inefficiency before it's going to roll over. That's what I'm looking for. Now, this could take weeks to play out because we're dealing with a large range. I mean, this range, it's in itself from that low to this high, took 1, 2, 3, 4, 5, 6, 7 months to create this range. So we're not anticipating, I'm not anticipating this to just come up one touch and then do, you know, it doesn't work. Markets don't work that way. So driving down to a weekly chart, we got that area right here. What else is overlapping? Well, we got this area right here. So I'm going to move this out of the way. Just like that. And actually what I'm going to do at this point, I'm going to go back to it. I'm just going to simply take it and narrow the price action because everything up here doesn't matter. So the market is in the below the 50%. The 50% of that is 99,078.71. So that means the market could easily trade up to 100K on this impulse up. December high swept. I'm going to get rid of December high because I don't care about it anymore. I'm actually watching the April 2025 high. Why that high? Well, because that high is this monthly imbalance right here. And that's the high and that's the high. If it can't reach to the high of it, that's actually signaling me that the market's actually weaker. So I'm watching that right here. So now, back to the weekly chart. The market swept all these highs. I'm going to go down to the daily chart. I was calling this out weeks ago, even during here and during this, all this price action that I wanted to see the market draw up to this. This was where I wanted it to go. And it did. I wasn't part of this move up. I was part of this move up. I got stopped out on my runner here, all in profit. I got long in this. I got long in every single move up. And after taking 3 longs with no follow through, I just gave up. And I said, I'll just deal with it. I'll look for the short because, you know, no need to. They were all 3 were profitable in this range. So they were great trades. So this breakaway gap has been completely filled in. No longer breakaway gap. Clearing these highs right here. Those highs don't look like anything significant on the daily chart. But if you drop down to a 4-hour, we can see that there's a whole bunch of swing highs right here. And then a 1-hour, you can even see even more. So all these highs have just been taken. Getting down to the 4, I'm not going to go underneath a 1-hour chart. So I'm watching this level right here, April's 2025 high, sitting at 95,967.35. There is the market displaced, boom, big energetic move above, leaving a buy side imbalance, sell side inefficiency. So what am I anticipating? Well, if this market's going to be bullish, one of the easiest factors to tell you if you have bullish order flow are down close candles supporting higher prices. So one of the easiest things you can see. Anyone can see it. So you have a down close candle. Draw it out in time. Did it support higher prices? Yes. You have a down close candle or a series of down close candles because it could be just the series too. You could use this one as well. It's the same. It's going to give you the same information. I just did this one because I'm just trying to prove a point. Doesn't matter which one you pick. So right here, sure, I'll check those assets after I'm done with this. So what I'm watching right now is the April 25 high. This imbalance specifically. If the market breaks down from this imbalance, I'm going to look for it to potentially be a break in market structure. Well, let me get down to the hourly chart. It shows you a lot more. The hourly chart You can see that the market has held that April 2025 high. So are we breaking down? Well, the market shifted structure. This was a bullish market on the hourly. It has put in a near-term top. Now, is that going to be the top? I don't know. But you can see that the market, if I look at these series of up-close candles, and I just extend them out like that, that's the change in the state of delivery. More importantly, and I'm going to get these shaded areas off because they're not necessary right now. If I draw a fib from that high to that low, and I'm just looking at the 50%, is the market having a hard time breaking the 50%? Yes. What is that signaling? Bearishness. So there's underlying bearishness in this market right now. And it's on the hourly chart. That doesn't mean it's going to stick forever, but these down close candles are supporting lower prices. So the market is starting to pull back. Now, it could just simply pull back into here. But what I want to look for is if this is going to start breaking down, how does it break down? Does it give like an energetic move lower and then a shallow pullback and then start pulling back into this imbalance right here? Now, what's the importance of this imbalance? This imbalance right here was the last imbalance on the daily chart. This is a buy-side imbalance, sell-side inefficiency. This was the last one of November. So what does that mean? Well, that means the market's going to utilize it multiple times. It's not one and done. As you can see, the market disrespected it here, but then look at the middle. Respected it, sent prices lower. Disrespected it, look how it stayed below it. Broke it, tagged it again, took off. So if the market's going back down into this, it's not going down here to balance anything. The market has already balanced everything. If we're looking inside this range high to this range low, where did the market spend more time? I'm going to use this right here. High here, down to the low. And let me flip this. Where has the market spent more time? Well, down here. In the green, I don't need an RSI to tell me that the market is over inside this range. When it's in the green, under the 50%, that's how I tell. I don't use an RSI. I know it's oversold. And it's accumulating. When it gets into the red, I know it's overbought. I don't need an RSI. You just see it. So the market, if it's going to reject up here, it might. I'm not saying it's going to. There's a good chance that the high is in, but it's still on a bullish run, if that makes sense. So what we're seeing is the market has set this low down in here and ran up to here. So the market, doing it again, that same logic, it's simply just be trying to find some value down in here before it goes up higher. So I'm not looking to pick the top of the market. I'm waiting for the market to shift bearishly, just like how this, just how it did up here. There you go to all the way up here. You had a very, hi baby, you had a very distinct shift. It took out a high, clear, distinct energetic move lower, and fell off. So that's what I'm looking to take place. It might not be as aggressive as this. It could just trickle down. I don't know how it's going to deliver it, or if it's even going to deliver it. But that's what I'm looking for. There's another thing. There's another look. This imbalance right here on the daily chart, right here. I am going to need this area and price to fail if we're going to see a prolonged sell-off. This right here, Monday's high of the 12th to January 14th's low. This buy-side imbalance, sell-side inefficiency, we are going to need to see this fail. Because why? If it's bullish, well, down close candles are going to support higher prices. So there, at this point right now, you can make the case that it's pulling back just to find a short-term discount to proceed to go higher. So it's not a short right here. I'm waiting. I'm not in a hurry to short it. So it's an inside day, no big deal. So the market is simply, at this point, you have to have that bias of being bullish, and the market is just pulling back to find some discount for a continuation move higher. That's it. So it could take weeks for this thing. It just made the high. So for instance, if next week doesn't take out this high and makes a lower high, then the market may be putting in that weekly swing high. Or if we see like an obvious breakdown where it's an energetic move lower and it starts building in resistance, boom, going to attack the lows here. Because this range that it's been in, it's already taken out. It essentially has done. Let me get rid of all this stuff. It's not that important because it's been stuck inside that weekly range right here. And I'm just going to move this right there because they're basically the same level. It's been inside this week's range for 1, 2, 3, 4, 5, 6, 7 weeks. It took out the high. Now it's falling back in. A bullish market would keep on going. Now, that doesn't mean it's not going to. It's just running out of steam. So you're not getting a massive squeeze. So what you don't know was this really accumulating of longs, or was this covering of shorts looking to redeploy shorts? I mean, I went long in this. I shorted and went long. So that's what I'm looking for. And again, I do like the narrative for me that is going down to these lower prices is still intact. And it won't be, let me measure this range real quick and let's get that midpoint one more time so I can get that price. I forgot it. Boom, boom. 135 or 100,358.35. So the market is still in a discount of this range underneath the equilibrium, the 50%. So the one thing you got to watch out for is this candle right here. Because this candle right here, this is candle's range. When that candle's range broke, this was the market structure shift. Technically, that one was, but this was the market structure shift lower, but so was this. This was a larger time frame market structure shift in the deeper range, larger range. So that was the market structure shift lower. So the market has changed its state of delivery. It's shifted to a bear market once that low was taken as an aggressive one. But once this low was taken with the close underneath it and this displacement underneath it, meaning that gap, this large range candle, which the market is currently in, we're going to make this, because what this is a ICT breaker. And then you have the imbalance right here. Boop, 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 boop. So if the market disrespects this area on a weekly closing basis, if we close up here, well, I might be wrong. If it closes up there and then this area starts supporting higher prices and it starts working higher, I might be wrong. My analysis might be wrong, and we could be working towards all-time highs. But, yeah, baby. Yeah. It's cute. But this is not framing both sides of the trade. You got to know when you're wrong. If it breaks and fails and gets right back underneath it, or holds it, and you start seeing this, well, you're going down here. Pretty simple. So that's what I'm looking at. Mr. Sure, I'll look at MSTR. MicroStrategies. All right, so MicroStrategies. One thing that I was watching on MicroStrategies is this consolidation range right here. Kind of the same kind of the same logic. The market has no need to return these prices for the in terms of balancing, making an efficient market, right? The only reason it would go down here is because it's already spent a lot of time back in here. But here's the thing: inside that range, it's staying above the 50%. That's that line. So as long as the market is building support in the 50% and it's not dumping lower, then this is acceptable because this is the defined low right here, and that is the defined high. Right, so it's a really large range. This is on a weekly chart. So I don't know if you're looking for long-term trades or just short-term trades, or we're in a real deep discount, but it's not looking great. It's not looking great. It's basically doing the same thing as Bitcoin's doing, except that's December's high. It hasn't taken out December's high. And then you have this gap right here. I don't look for gaps to be filled. I do look for them to trade to, but I also look at them for once the market trades above them to support higher prices. So if we're looking at a daily chart, we do have a low set, and to me, that's a key level, the 50% of a range. It's not just key level for me, this high to this low. It's key level for the market because, I mean, shit. Let's put the actual, get the actual number of this. And this is still an objective range. That's a defined swing high. That's a defined swing low. And $150.50 is the midpoint of that. And the low on this candle comes in at, shit, 149.75. So that's pretty darn close. You're only, what is that? 75 cents off. So it's pretty damn accurate. So I would be watching for MicroStrategies. Number one, Bitcoin. But right here, this area and price right here, this imbalance, because there's a little gap right there, and then you have these candles, the market traded up to it and traded back below it. So dropping down to a 4-hour, this up close candle right here. If you draw that out in time, the market's having a difficulty getting above it, right? But it did set a low. It did shift its market structure from this low to this high on the 4-hour. So the market structure is framing bullish. The question is it going to go higher and continue? And if it does, where? Well, here, and then up in here, if it's going to continue. Losing essentially an objective area to watch, these series of down close candles right there. And you can include the wicks. See, it did tag the wick there. If the market loses this area right here, this for me would be an opportunity to buy if it's going to hold. But if you get down here on a 4-hour closing basis, starts closing 4-hour candle under here, it's probably about time to exit that position. Even before, if you had your stop down there, because it's not looking great at that point. But especially if it completely disrespects it. But right now, there's a buying opportunity here. If it doesn't get down to there to me, then it's bullish. But the asset itself is not bullish. It's a bearish asset. So any rips should be looking to be sold into. However, we could be seeing a dead cat bounce and work its way higher. And where would it work its way higher? For me, I'll take that swing high here to the low there. And let me see, there's a better one on the hourly. These relative equal highs right there. Like if I was going to do a weekly trade and I was bullish, I'd definitely looking to take profits above this high. But the market has already set in a low, accumulated, had a nice push up. So does the market have one more leg into it, and then you have a profit target here to here, and then maybe leave a piece if you think it's going to go higher into the gap right here. But it does depend on Bitcoin. So QQQ or no RKLB Rocket Labs bullish. Don't sell this. Yeah, this is super bullish. Now there's nothing to refer to. Nothing to refer to here. But what we can do is project levels. If you're in this and you bought it down here, well, good for you. That's nice. Right now, the market has gone 4 standard deviations from this breakout. So that's a measured move times 4. So if I extend these levels to the right, and drop down, this is how I find I'm using this range that broke out here. Since market's making all-time highs, this is how I determine.
My iPad died.
Oh, well, you gotta go plug it in.
Yeah.
This is how I determine.
I need you to plug in because it's not real job, it's a Papa job.
All right, I'll do it real quick. Hold on one second. I'll be right back.
Good job. It's not real job.
All right. All right. All right. I'm back. Okay. So yeah, so you can see that these that would be 92. That would be 4 standard deviations. That's a pretty large move. These are just gauges, and they work pretty good. But now we have a range right here on a daily chart. I could just use this one right now, but this is bullish, real bullish. So it's about half a standard deviation off that move, and that's where the resistance is coming. So essentially this, you can see, now you could use these levels like this from if you just project them out and project them in quadrants. You can see that support generally when you're using a really large range from forever ago, they get more and more inaccurate, like using this stuff from forever ago. But if you use the near-term price, it's a hell of a lot more accurate. So you can see that once this high was broken, it pulled back in. This was all inefficient, and then it has launched higher. So if you're still going to be bullish on this, you got to get a pullback. Not financial advice, but you can see that it's supporting prices right here. Wasn't able to break down. So this thing is going higher. How high can it go? I mean, it could go up forever, but one standard deviation of that move is 110. So getting out at 110 or taking profits at 110, yeah, that's good stuff. But if it's a buy and hold, I don't know anything about the company, but it's great. It's a great market. So yeah. QQQ is just the Nasdaq. So you can see that. I mean, I'm looking for. I'll show you on the futures contract that this is actually what I trade. 2026, wrong year. So I'm looking for that high right there. I'm looking for the market to trade up to 26,133.50. That is the 5th of November. So go to QQQ. 5th of November's high right there. So that would be that price right there, which it's already been to. But this is regular trading hours. So I would be looking for, well, it's already hit that too. So it's essentially has hit this target, but it hasn't hit it on the futures market yet. So essentially this entire gap right here, what is it telling us? We utilize this entire gap in price, and that's the 50%. Unable to close above it, breaking down, not necessarily breaking down, but it's unable to break the 50%. So to me, that I look at that as selling resistance. So the market to me right now is most likely going to break it. Why is it going to break it? Because once it came down to that gap, it has gotten into it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 times. 17 different days it has hit this gap and was unable to break it. So I look at it as a battering, like if you're breaking down a door, you keep, eventually it's gonna break out. So I am leaning towards a breakout on Nasdaq, and same with ES. I do think they're going to give a pullback, but ES is also, making all-time highs. So they're real. The indexes are bullish. YM. Consolidating at the highs, that's most likely going to lead towards a breakout of the highs. CRWV. CRWV. Well, it had this nice big move up. It's in a discount. I don't know anything about the company or anything like that. It looks like it has built in some support here. So I don't know what the time horizon is on this, or if you're looking to hold it or whatnot. But if it's a buy and hold, then as long as you were buying down in the red, you're looking good. It is trending lower, but it's inside this huge move. So it's price discovery as it shot up. It's retracing down on it, but it's doing it very constructive and very measured. It's not completely breaking down. So the one thing to be, you have to look at the current trend, and this is a simple way that I like to do it. This leg down, set a low, trade it up. You can say that that's the 618 swept these highs and bounced right here and broke down. So one thing you could be looking at here is that looking to repeat again? So I'd be watching, if I was long on this, I'd be watching right above the 50%. I'd be watching this candle right here, 110. I would definitely be looking to take some profits on that. If I got long down here, I'd be looking to take something off there, because at this point, it could be putting in another leg lower. Don't know. But if the market structure fails to make a lower low and continues going higher, there you go. So for me, if I was long in this, my terminus, my take profit, low-hanging fruit objective would be right here. And taking a piece off right there and paying yourself at $100. It's already at 98. It's probably going to hit $100. That's likely, but I don't do fundamentals. This entire area right here, we got this gap down. So I define this as naked. The market has never traded there in that area. So that's a good draw. And that's where it looks like the market wanted to go to. So we'll see if it's got legs to push up higher. But if you got long, not a bad long. But I'm one for taking profits at really simple levels. And inside here, to me, would be a simple level. So if I was long somewhere down here, inside of this accumulation, and I'd even use the high end of it, let's just say I got in right there with a stop. We almost right there would be almost like a 1-to-1. So, it's not like overly bearish because you're still inside this structure here, but it is in a bearish. It is making lower highs and lower lows. So you have to ask yourself this: is this market reversing? And it's going to start making higher highs and higher lows? Or is this market moving higher to set its next lower high in order to go lower? Can't tell you. I don't know. So, but a logical place to take profits would be right up here, right around the $100, or inside this area price right here where it was naked. And now it's got close on it. So that's a funny way that I look at it. But anyway, Bitcoin, what's it doing? So it's starting to get heavy. It's starting to get heavy. Intraday, Get rid of this. Get rid of this. Just clean up this chart a little bit. It's not 40 minutes. Ooh, it's getting long. Probably going to cut this off soon. See, that's getting heavy. It's disrespecting that 4-hour imbalance right here. There's one on the hour that's almost the same price levels. So what we're watching for is this. On the hourly chart, give me your first sign. If there's something, I said watch this April 25 level. I'm looking for the high to be set above. I said it in Discord, actually. I'm anticipating the market to reverse above the April high. April's high. That was referring to this April's high. So I'm not saying that this is the top, but I can tell you this. Intraday, it was a good short. I didn't take it, but there you go. But when you're watching for this area of price to hold right here, just a little bit. This is going to be the first, for me, if the market gets heavy and disrespects this area of price right here, which I'm going to highlight in orange, and start closing hourly candles underneath it, I don't want to see the market get back above it if it's going to be a reversal. If the market gets back above it, then it's only just a pullback here. So if we see something like this, where this high was put in, the market closes underneath it, but then gets back above it, that's signaling to me that one of two things: the market doesn't care about it anymore, and it's going to consolidate, or it was looking at a higher time frame, parent time frame, which would be the imbalance down here. So right now, you still have to be bullish. This would only be like an intraday short. See how this candle right there has no wick? That candle has no wick. The market will almost certainly go back over these candles because they're too smooth. It's too clean. The market doesn't like clean. The market likes jagged. Markets like jaggedness, not clean. So, and that's that. But so far it's holding. Could just be a pullback for buying. It has not reversed yet. And yeah, there's not a whole lot. There's not a whole lot more to do. I still think you have to look at this as just a pullback for a continuation higher because this is a little steep of a move. It has not broken down yet. One could argue that it failed to make a higher high. We could check Ethereum, to see what Ethereum did. Ethereum looking very similar. None of these levels matter. I haven't looked at Ethereum in a long time. But Ethereum has failed to take out its December's high. So that's telling me that Ethereum is weaker, number one. So if you're going to short something, short Ethereum, because it's telling me that it's weaker, because it failed to take out the December's high in Bitcoin. But can't really glean anything from that. I don't think the short's going to be this week. I think the short's going to be next week or the week after. If it's going to show up early in the year, it's going to be, there'll be an opportunity to get a short in on it. It's just not quite yet. Inside day. So inside days usually lead to expansions. Now, which way is it going to expand? Could be lower. Getting below this candle's low right here. I'll tell you what. Here's a really objective price point. You want this? If I measure this range, series of down close candles, that series of down close candles is a order block. The whole series So $91.80.19. The market starts closing daily candles underneath that. It's the mean threshold, the middle, 50%. The market starts closing daily candles underneath that. The long doesn't look too great anymore. But you could look at the market. You still have to look at this as a low, a high, a higher low, a higher high, a higher low, a higher high. So is the market just going to simply pulling back? These are the things I ask myself. Is the market pulling back? That's the low. That's the high. That's this. And that's that. Is the market just pulling back to set one more high or one more higher low so it can go higher? And then do one of these. That's what I want to see. I want to see something just like that. Do, up, boom, rip, boom, dump. Where it's very obvious. That's what I want. I don't always get what I want. But right now, if it gets below this low and under this imbalance right here, if the market just does something like this, not in a straight line, but get my point, goes down, breaks this, it's going for the lows. It's not coming down here for any other reason but to go lower. And that's that. So as we can see right now is the market is respecting this imbalance right here. The market is respecting it, and it's having a bearish reaction from it. The market structure, taking out that low here, once this low is taken right there, the market structure switched bearish, and then I would look for a pullback. I didn't take this today. I was not awake, and I don't trade Bitcoin intraday like this. I trade Nasdaq. So look for the market to pull back above the 50%. Well, what's above the 50%? There's the 50% with this series of up close candles. That's an order block. This imbalance right here. And there's also, it's also inside of a daily fair value gap. So that's what it's doing. The market's balancing this range right now. So for me, going into tomorrow, there's 20 minutes left on this candle. Close this out, get this out of the way. It's just how I read price. To me, it's just telling a story. So if the market is able to get above that imbalance right there, and then it stays in the upper half of it, starts supporting higher prices, then this entire leg down, to me, would be a whole series of down close candles that will support higher prices. And then I would look for the high to get taken, or at least these highs right here. But right now, the market is signaling. Let me make these a little bit darker. That's obvious. The market wasn't able to get through the midpoint of this. Let's make it a little thicker, so it's obvious. Right here, the market stayed in the lower half. It's not overly bullish. However, it's at the top of a price run. So it's, the market's got to pull back. So we'll see what it does. Nothing to do right now for me. The fact that it's below this low, we start seeing continuation lower. I think it's in trouble, and the high, but possibly I'm looking for a quarterly high to be set, and that would be if next week's high or next week's candle opens up, it doesn't take out this current week's high, and then we get continuation lower. Then to me will be the trigger to say I know that the quarterly high set. So I will know with a great deal of certainty if next week's candle fails to take out this high, and then we see continuation underneath this week's low. And then I'll be looking for these lows all to get hit, this low here, and then all the way down to the old all-time high and down into this area right here, 69K. So that's what I would be looking for. But right now, I got to go with it's still bullish on the week, so I would be opposing order flow and trying to pick the top. And I don't do that. The order flow is bullish still on this run. I think that's a wrap. I think I covered it all. So I gotta go make a sandwich for my daughter. Later.